Hello students, in this lecture I am going to discuss the term trade receivables. See, there are two terms, one is trade and second is receivables. Trade means purchase and sale of goods with the purpose of earning profit, and second is receivables. Receivables means amount to be received, amount to be received from customers to whom we sold goods on credit basis. So, credit sales is the base of trade receivables. Remember this. Whenever goods are sold on credit, that gives rise to trade receivables. Trade receivables can be classified into two categories, students. The first one is debtors, and second is the bills receivable. Now, let's take the example of the first one, debtors. I am taking an example: sold goods to, suppose, Sumit for rupees 15,000. This is a financial transaction. Sold goods to Sumit for rupees 15,000, amount not yet received. And it is also not specified when the amount will be received. In these cases, the goods are sold on trust basis only, because some people are regular customers to whom we keep on selling the goods on credit after 15 days, 1 month, 2 month, 3 month. That is the understanding between the two businessmen or businessman and the customer, that when the amount is to be received. So in this case, the date is not fixed, that when the amount will be paid by Sumit or by the customer. So in this case, journal entry will be Sumit debit 15,000 to sales account. So Sumit is what? In accounting terms, Sumit is our debtor, student. It means debtor is the person to whom goods were sold on credit basis and amount to be received in the days to come. I mean, amount is to be received in future. The person is treated as a debtor. And in this entry, Sumit is our debtor and sales is our main source of revenue. That's why it has been credited. Then what is bills receivable? Bills receivable is the document which reveals the specific date when amount is to be received from customers, that is signed both by the seller as well as the customer, I mean the buyer of the goods. That becomes trade receivables actually, or the bills receivable. For example, taking this example further, sold goods to Sumit for rupees 15,000. Sumit is our debtor. Then what I did, I drew a bill upon Sumit. I have written a bill, that is a specified prescribed pro forma. I drew a bill upon Sumit for 2 months, which he accepted. This shows that Sumit has given in writing that this 15,000 rupees will be paid by him after 2 months. So that bill or that document is termed as bills receivable. So first entry is this, and second entry, when the bills receivable is accepted by the debtor, accepted by Sumit, that second entry will be bills receivable account debit, bills receivable account debit 15,000. I am using the same example to Sumit. See this. And you have to understand the difference between the two students. If the first case is taken, Sumit simply is our debtor. The days or the date of receiving of money is not fixed. But when the date is fixed, we drew a bill, we have written a bill, and Sumit has accepted that, put his signature, and on that it is mentioned that Sumit is going to pay this amount after 2 months. That becomes bills receivable. So journal entry for that, bills receivable to Sumit. See, in accounting, you need to understand the things. Firstly, credit sale give rise to debtors. Then debtors are converted into bills receivable. In case of debtors, nothing is in written that when the amount is to be received from customers, and somewhere it is a risky situation. If the debtors fails to pay the money or refuses to pay the money, it is difficult to take a legal action against the person. But this type of transaction, when a bill receivable is drawn and accepted, here the businessman is very safe. In this case, if due to any reason the customer fails to pay the money, the businessman is in a position to take legal action against the person. And bills receivable is our asset, is our current asset, and it is shown on the asset side of the balance sheet. So students, I think with this complete lecture, a small lecture, and with these two transactions, you are able to understand and make a distinction between debtors and trade receivables. Subscribe the channel if not yet subscribed. Share the video with your friends and classmates, and press the like button also. And if you want to understand the same video in Hindi, then visit and watch my another channel, that is Commerce with Difference.